Before we jump into today's podcast, I'd like to thank our sponsor, PropTex. Now, what does PropTex do? PropTex is the leader in immersion into real estate listings. Now, what do I mean by that? They allow you as a visitor to a property portal site to engage with any of the images of a house. You can go in there, you can add furniture, change the furniture, put your own furniture into that listing. And in doing so, you can actually, as the consumer, fall in love with the property. So if you're a property portal out there and you want to get a better engagement with your consumer, some of the people who use it are getting 20 to 30% more dwell time on their sites, then talk to the guys at PropTex. Email Stefan at proptex.com. That's STEFAN at proptex, PROPTEXX.com. Over to today's interview with Mike Kenner from FazWaz and now the MD of Lifull Connect.
Hello and welcome to the PPW Pod, bringing you news, views and interviews from the world of real estate marketplaces and PropTech. My name is Edmund Keith. I'm the editor of onlinemarketplaces.com. I'm joined by Simon Baker. How are you doing, Simon?
Very good.
And I'm joined by the man who might have just taken on the most ambitious and difficult job in our whole industry. Mike Kenner, all the way from Thailand. How are you doing?
Almost as good as Simon here, so not there yet.
So Mike's a bit of, I guess, the man of the moment in the industry at the moment. You have just signed what I think is a very ambitious and very important deal in the industry. Before we get to that, there's quite a lot of, I think, exposition that needs to go on around all the different companies that we're going to be mentioning. So I'm going to very quickly give the listeners a bit of a rundown of what we're talking about here. So Mike was one of the founders of the tech-enabled brokerage FazWaz, which operates out of Thailand. That was back in 2015. FazWaz in its own right is actually kind of one of the most important search and discovery sites in the Thai market. It got acquired by Lifull, which is a Japanese real estate portal company, back in 2023. That was via Lifull's so-called Lifull Connect overseas business. Then in January this year, a few days ago, FazWaz signed a deal to take control of Lifull's entire overseas business, which includes aggregators, Mitula, Trovit, Nestoria, a whole bunch of real estate portal sites, so Property in Latin America, .property Southeast Asia, and, FazWaz. That's kind of getting us up to speed. I want to go back really quickly to 2023 when you signed the deal, the initial deal with Lifull. What was the kind of hypothesis behind it? Why did you think that a tech-enabled brokerage fitted into Lifull's overseas business?
Yeah, we just the honest truth is we thought around what was the lever to scale, and we thought this was definitely buyer leads. They owned a portal .property, or a portal network of websites and HitFlat. So we thought if we combine the tech-enabled brokerage with the portal, we can achieve a lot. So that's what we sold them to, and obviously they said they would like to take ownership of this. So what we were trying to achieve is a much larger business, which is actually what we have today, which is the FazWaz business combined alongside the portal. So that was the investment thesis of what we presented.
And just to actually a comment on that, when for those who are not aware, I was a former chairman of the Mitula Group that was purchased by Lifull Connect and now is run by you. And one of the things that we identified way back in 2016, 2017 was that you have vertical search, you have portals, and then you have people who actually do the transactions. So it sort of made sense, right? The full stack from people at a vertical search driving traffic to portals, such as .property, for example, and then, leads getting generated out of that environment into tech-enabled brokerages to then convert and capture the commission as well. Is that sort of how you've been approaching it in Thailand with FazWaz?
Yeah. I mean, the honest truth is the portal has definitely played second fiddle, and we've worked out how to use FazWaz portal to grow the brokerage using exactly almost that flow that we're looking at. I think the only The only downside is that the core focus of the business. I watched a podcast with you and Square Yards yesterday, and he ran the business independently. Because we've had it all together, one takes focus, the other one loses focus. So I could definitely see that kind of what he was saying as being an issue.
Okay, so to the latest deal, which was signed, I believe, earlier this week or maybe end of last week, how did that come about? What was the thinking behind it? And I imagine there were probably some hurdles along the way as well.
Yeah, good question. I mean, so to be honest, so Simon was definitely, me and Simon have got an active relationship over the past few years. I mean, Simon was an investor in FazWaz and led one of our rounds during COVID when we were not having the best of times. When we sold, we had seller remorse straight away. And Simon said to me, don't have seller remorse. We had seller remorse. We started thinking, what we would like to complete the mission. FazWaz was growing at such a quick rate. We thought we would like to effectively take back the FazWaz asset realistically. That's kind of where the conversation started. I think the reality is that they weren't going to sell us the coffee. It would have to take the whole coffee shop. And this was the conversation that evolved. There's actually a post on LinkedIn saying how we bought the coffee shop, which is kind of the narrative from them not selling us the coffee. So I think it was, we had a long way to grow in Thailand. We still enjoy what we do. And we was always curious what would happen if we had international assets all over the place and how far could we take this? So that kind of curiosity and that kind of drive that was still left in us pushed us to at least go and start the conversations with Lifewall to get a deal done.
Okay. I'm really interested. The one big question that I have about all of this. So again, for disclosure, I used to also work at Mitula Group. I used to work in one of the aggregators. I recently wrote an article and we actually spoke to somebody who used to run an aggregator and saw their business declining and all the rest of it. It seems, at least from the outside, like at least the aggregation part of the business is kind of slowly dying off a little bit. You obviously must have confidence in them. What do you think their value is nowadays? Can they still make money selling clicks to portals, or is there some other kind of value from the data that they bring or the traffic that they specifically bring to the other parts of the business?
Yeah, no, it's a really good question. It's one of the golden questions and challenges that we face. It's like, what comes off this legacy model of just selling traffic when Google and Facebook are also extremely good at selling traffic, and we're probably spending a third in the three-legged horse race at the moment. But the way we see it is that at the moment, we just sell clicks. If we package this up with something, whether that is, data or something else, but we package the click up with something, there could be value. With all the AI layers that started existing, lots of opportunities opened up, whether it's, a click with a phone number, it could be something else moving forward. Right now, obviously, with day one, we don't have that. But what we saw is a very sharp decline in traffic. I think Lifewall have been open around some of the losses had the aggregation. We feel like it's stopping. We might be at the bottom of the premises. We might have chosen a good time to take control of this business. We feel that short term is definitely recovery, and selling traffic is still, companies still buy traffic. We buy traffic of all different sources. So traffic is still very valuable. I mean, the whole world has not gone to ChatGPT yet for search, even though everyone's, going mad about this. So we still see a lot of value in the aggregation side. We feel that it's a legacy business that's been left in core. And we feel that with some tender love and care and some work, we can get this to be, a thriving business. Again, whether the current model holds long-term is another question. Whether it has to evolve into clicks to packaging this with something else is probably really the answer for moving forward.
Just a quick question, and share as much as you want and can. Is the traditional vertical search business still generating revenue for? Are you still calling it Lifull Connect, by the way?
So as of today, it's Lifull Connect. As of tomorrow, no, it won't be Lifull Connect. So we're probably going to have to go through a rebranding exercise, which will be quite exciting. But I think, and on that leads another question around, do we keep it as one company, which is we can speak about afterwards. But when you say vertical search across the different verticals, real estate is the core for us. So, I'm being open here that obviously jobs and cars exist across the different platforms. But for us, this is definitely not our focus. I think eventually we'll probably phase some of this out realistically.
Okay.
Yeah.
But is it a material revenue stream at the moment?
No.
So the vertical search business has disappeared from a revenue perspective.
Correct. So the core revenues is real estate. I don't know the exact number, but let's just say it's going to be
real estate vertical search.
A real estate vertical search is still
Yeah,
a
yeah, yeah.
large. Sorry, I thought you were talking about the different asset classes of vertical search.
No. The vertical search is a big group because you got vertical search, you got businesses like your Mexican business, which is a lot of it's portal based, and then you've got transaction businesses. So if we think about the group of vertical search revenue,
Fine. Yeah, it still is. It still is significant. So when I say significant, more than 50% of our group revenue is.
So the interesting opportunity I would have thought from an outside in perspective, there's sort of three levers you get to pull, right? One is, well, if it's still driving a lot of revenue, that means there must be demand for the product, right? People aren't going to be paid for something they don't want. So if there's demand for the product, can I sell it better, smarter, and actually, if not stabilize, grow that revenue a little bit? Two is, how can I use AI to reduce the costs or be smarter in the operation around that? There must be a big opportunity there. How do you think about AI and vertical search?
I mean, it's a good question. I think, in all asset classes at the moment, AI is definitely looking at cost reductions and looking at basically uplifting revenue. I don't at the moment have the answers as of day one. I'm going to be totally honest with you and not blag something which is nonsense. So right now, we're not too sure is the honest truth. But I think over the next few months, we're looking at how we can add more value. I think for us, dropping cost base isn't the primary what we're trying to do. It's more how can we deliver more value to end consumers and effectively extract more value backwards. That will be the question. And does the vertical search business, as you describe it, stay the same? I mean, we've already seen vertical search being diversified in the regions. In Latin America, we run more portal businesses, and that was originating from vertical search. So, and then obviously in Southeast Asia, we have a transactional business that originated from vertical search. So do we have to keep vertical search as vertical search, or is this like a butterfly that becomes something else in the long term?
Okay, the other kind of burning question that I had looking at the corporate website yesterday, doing the notes for this, I counted 12 different office locations in, I think, 5 different time zones. You have 3 different business models. You have 15 brands, 3 verticals, and I stopped counting the number of websites because it went over 100. How do you manage all of that? You're based in Thailand. You're going to be up 24 hours a day having meetings, I imagine, right?
It's a good question. So look, I had the same questions when we started looking at Lifull Connect in the first instance. So the first thing I did is I broke it down to a very quick elevator pitch. What is this business? Because you've got ex-Matura, ex-Trovit people describe it one way, you've got ex-Portal people who describe another way, and you've got transaction people describe a third way, and then you've got the staff that also say something different. The business is 3 core regions: LATAM, Europe, Southeast Asia. In LATAM, we run purely portals, which we sell leads. In Europe, we sell traffic predominantly, so we sell clicks. In Thailand, in Southeast Asia, we sell properties. That's kind of roughly the breakdown. There is obviously some other countries in North America, but we don't talk about it. There's other business models. For example, we have CRMs, which are also there. But just to make it easy, 3 regions running 3 different business models as kind of, that's the best way to describe it. Otherwise, it gets very, very complex. And predominantly as well, 3 core head offices. We've got Mexico City, Barcelona, and Bangkok in Thailand. They're the core 3 head offices. We've also got satellite offices in other places. They're not worthy of a long discussion around that. Yeah.
Okay. Yeah, fairly succinct. You've got 3 different core areas there. Are you gonna split your time personally between those places, or is it going to be the corporate structure going to see somebody take over the different business models or different regions, or how are you thinking about that?
Good question. So historically, the company's been run under a group structure where one person oversees everything. Realistically now, we know it's too much to take off. So putting in as much as we can see it, some regional leads for the regional CEOs or regional managers. They're looking after specific regions. Obviously, from day one, we've got a lot of integration going on. So be a group CEO who already found. But so the honest truth is it's too much for one person to manage, right? With the time zones, different business models, knowledge points. So the only way is to basically separate these assets off in the long term and say we have a business in Southeast Asia, a business in Europe, and a business in Latin America. And I think that's the best way to look at this. Maybe the same way a private equity company would hold different assets in different regions and wouldn't be operating under a group structure in some capacity. that's kind of high level how I see it long term. Is this working like this today? The answer is no. But I guess we've got a period of time to try and work out how to get to that structure. Yeah.
I think,
But
I was going to suggest that, you mentioned it yesterday with Tanuja's story about Square Yards in India, where he has finance, he has mortgages and finance, he has transactions, he has a portal business and so on. He basically said, I just got someone running each of them, and my job is to make sure they talk to each other.
Correct.
Which I think is, and I think when I was just reflecting on how you describe it, you've got a Latin American business that's a portal business.
Yes.
So you need someone in Latin America who understands portals. Then you've got a Europe-based vertical search business. So you need someone in Europe who understands vertical search, which is different to understanding portals. I know because I've been in both, and they are actually very different. One's a customer of the other at the end of the day. Okay, and then the third is a transaction business in Southeast Asia, which is totally different again. And in fact, that's the most furthest, right, from a traditional portal or vertical search business that you can get, because it's salespeople and real estate transactions and commission structures and so on.
Agreed. Sorry. Sure.
So my question is, and you said before, you've got a group CEO. Aren't you making the same mistake then as you mentioned before, I think, recruit structure, where you have one person running everything? If you have one person trying to run everything, if that group CEO is not you and it's someone else, aren't they faced with the same issues?
Yeah, it's a good question. So I think, number one, we definitely don't want to run this how it's been run previously, because obviously it hasn't worked. Otherwise, this opportunity probably wouldn't exist in the same capacity. So if we look at what the FazWaz model was when we were running it, we had there was a group CEO, and I was the CEO of Thailand, effectively, in that capacity. And we had total autonomy. We grew at 60-70% every single year. We've had a history of us being with Lifull Connect, and previously it never really changed too much. So as long as, the benefits of the same way property grew of not being a listed company anymore, and having that, that autonomous control over something would enable. So we need to bring that founder entrepreneurial drive back to the company, and allowed for clear delegation and pure leads on a regional basis. And all we should be looking for the group is synergies in relation to the businesses. That's the core. So I think in some capacity it's decentralizing the business and empowering the regional leaders to take charge and take ownership.
So going back to the deal again, we mentioned that Lifewall is this publicly traded real estate portal operator from Japan. They've obviously done this deal for one reason or another. Am I right in saying that they've kept an interest in the business, but it's not a balance sheet now, right? So what's their input going to be, if any?
Great. I mean, they've been quite open, so I'm not saying anything that hasn't been disclosed, but they have non-voting shares. So effectively, they're now a financial investor only. So their input would be extremely limited, just being open. They're still a shareholder, and they have a leading portal in the region, or one of the leading portals at least, the number 2 player. So they could be extremely valuable when looking especially our portal models in LATAM. So there's still value there, and also especially if we're looking at raising capital or some of the synergies they do with AI. They have a huge tech team and make huge investments. But in general, they're basically focusing on their core business, and it's the right thing to do for them. And it's the right thing to do for us to focus on the overseas business as a whole. So for us, this is not our overseas business. This is our business. So just that change in narrative works for us. So they're only looking now at the Japanese business specifically. And I think that's the right thing.
When you roll the clock forward, okay, what's the objective? Is the objective to build something like, the Aviv Group, which is a big group of companies that are working well together, sharing technology and so on? That's sort of one path you can go down. The other path is the Adevinta approach, which then got sold off and then getting broken up, and individual assets are being sold off. This Still Group, which is Daft in Ireland, got sold off last year. I know there are people like Tony Blamey, who's going to be on the podcast in the future, who's now running Photocasa. He's got a mission to build that business. Now, he's not building it for eternity. He's building it because they want to sell it at some point in time. So how do you think about the future of what is currently Lifull Connect?
Yeah. So, taking inspiration from the last speaker on your podcast, talking about he's obviously running these businesses independently of each other. They said, in right, each business should become its own unicorn. I'm not saying in terms of the value, but we see clear separation of the businesses, right? Um, we do see some sharing technology, but we see each individual region being an equivalent to its own property group. So property group being one of the leaders in Southeast Asia. We see our Southeast Asia being a property group equivalent, the same in LATAM, the same in Europe. That at least is the mission. Whether we get there with all the assets is just going to be down to execution, how hard work. But we do not see this ideally as one group, a whole group being sold off or listed in.
So the objective here is, because I can imagine, right? Latin America, you've got a good business there in Mexico. You're clearly wanting to drive the growth of that, but it's sort of strange when you look at the portfolio, right? A lot of it's you basically, I think if you get Japan, drill a hole through the earth, you might pop out in Mexico City. Okay, it's a long way from what was traditionally the head office. Do you think about, well, maybe we could merge that asset with like a Quinto Andar who's got assets there, or Propiedades, or any of those other players in that market, Mercado Libre?
Yep. I mean, so in terms of understanding who the market players are, I mean, Simon, you probably know them a lot better than myself. When we look at, say, Latin America, we say, Mexico, I mean, we're probably a number 3 or number 2, realistically, because 1 and 2 are the same company. We know what we did with FazWaz in Southeast Asia. So we're thinking, fine, we've got 2 options here. We can either go and explore alternative revenue sources and grow the business at a very fast rate. The second is to make a merge with another company to create some sort of union, whether that's a LATAM 360 or another one that you spoke around, to create a stronger portal. I think the issue is, in each region, just being open, we're not strong enough in terms of our headline numbers. So what we don't want to do is have a mixed bag of everything, in my opinion, of smaller assets in different countries. We would like to do what we've done in at least in Thailand. That's the roadmap of what we're trying to achieve, and become the market leader by all metrics, maybe outside of traffic, which is the only one we miss, but everything else we're probably leading in, and have a significant impact on the market. So I think, to answer your question, again, we don't have a full roadmap for this. We feel there's a long way to go. We're seeing, obviously, the way Lifull Connect went is, and the same way Matura went, was search or click to search. They never went to transaction. We've now gone all the way from search to transaction in a market. We have a very strong case study for it. We know the other markets are different, but we feel that we can enter multiple markets now with the same roadmap and a cheap ride. So it's far away, but the lessons can be shared, the technology can be shared and provided, the processes can be shared. And we have the confidence and risk appetite to go and push into markets and effectively roll out different models. So, yeah.
Okay, I'm just following on from your point there. It seems to me, at least, that perhaps what you might want to do is replicate the most successful, or the part of the business that you know how to do best. So maybe establishing tech-enabled brokerages in some of these markets where they don't currently have them. Would that be fair to say? Like building a FazWaz or a FazWaz equivalent in somewhere like Mexico, for example?
I mean, it's definitely an option. I mean, look, realistically, in Thailand, we've achieved X with a very minority lead flow comparative to what we have in Mexico. And Mexico obviously is a much bigger market, a huge foreign direct investment going in there, very, very attractive. What would happen if you played the model there? Could it be 100 million in revenue? Could it be, we don't know. So 100%, look, what we know is a tech-enabled brokerage will be rolled out in multiple regions in Southeast Asia within this year anyway. We're rolling into markets. We have traffic, whether that's the Philippines, Indonesia. This is happening because we can now be aggressive without these restrictions, the handcuffs based on us that we had previously. Whether this happens in LATAM or not, I think it's more strategic. We don't have the answers. So I don't want to commit to saying we're going down the transaction route. It's definitely an option. It's like, if you were sat there, you've got 3 options. 1, sell the business. 2, grow the business. 3, diversify the business model. Maybe Simon will probably come up with a few creative options on top of that. But there's not loads of options. So I think right now, what we do want to do is grow. That's 100%. The mandate is growth, lots of growth at all costs. So see if that means we would like to have some organic growth as opposed to acquiring in all the growth. We don't see it as a healthy model. I think we've seen how other businesses have been doing this and not really, getting the rewards of what they've been buying in. So we like to buy in synergy businesses and then grow as heavily as we can with the knowledge of synergies we have. And you're correct. I do come from that transaction background. So naturally I'm geared up to think transactions, because look, I did and I'll be open with this. I did how the numbers work out. On average, our CPC gives us around 4 cents on average in terms of per user. On average, our portal gives us 7 cents. Our transaction, we generate 63 cents. So if you put them into buckets and you start drawing them up, you're like, how do I get to this bucket? I mean, that's how I look at it from a very simple layman's perspective. This bucket does really, really well. This bucket is hard to work with. That being said, there's a lot of complexities in there. I don't want to yabber on too much. So, but I'm trying to be honest and open as I can be to give you everything I've got. Yeah.
The one outside-in piece of advice I'll give you, and I've chatted to a lot of the people in Mexico who operate businesses there, just per chance, is that not all markets are the same. And I think this is where people trip up. Even if we just take property portals, the marketplaces, traditional marketplaces, what when I was at REA and then subsequently have discovered that not all markets are the same. So we thought, we're in Australia, we'll go to England, it's the same. It's actually different. You go to then Italy, it's very different again. And then we went to other places, Middle East, in Dubai and so on. And that what we discovered was, while the underlying model is the same, you have people look at a website, people advertise to be on the website, there was a dozen nuances around the outside that make them actually quite different. And we rapidly learned the lesson that not all everything that glitters is gold, and it becomes quite hard. And the other thing that we also learned was the mindset of a market leader versus the mindset of a number 2, 3, or 4 player who has to be an aggressive follower is actually very different. Okay, so you have a lot of differences in that, plus then the tyranny of distance, multiple time zones. So you're far more reliant on the local people to deliver the results. And if they're not emotionally aligned.
Great. And this is going to be a founder-driven business. So we are not, I'm not corporate. I'm a hardcore founder, right? So we are looking to acquire businesses that have founders and drive the business. So I understand there'll be mistakes, and we agree the markets are not all the same, right? So that's why we need to make acquisitions into companies that have strong leaders. Not this is an acquisition for an exit, so they could all walk away, but strong people to run these businesses and help grow these businesses. Yeah. That's kind of at least our strategy, because distance is key. Is obviously, this is as far away as it gets from Mexico to be realistic. And the second is that the knowledge points. We just don't have the information. We can't be traveling and be everywhere at the same time. So the M&A strategy for us is going to be key to get us to where we need to be. Yeah.
And I think if you from an outside-in perspective, you were to look at this, if you can really crack the code on how do I take the FazWaz model to other markets in Asia, you then, I think, release a lot of value, because you go, well, investors like regions, they hate diversity. Okay, and finding an investor go, I like the fact they're in Mexico and Thailand, sort of is impossible.
Yeah.
Right.
Yeah.
But investors will go, I like Southeast Asia. Look at EQT with its recent purchase of Property Guru. They're basically saying, I like Southeast Asia. Okay. And they've placed a big bet there.
Yeah.
So you can absolutely crack that code of not just Thailand, but Thailand plus other big markets in that region. You've got a natural acquirer or other investors on your door.
I agree with you. Listen, ever since we announced, during the process, I spoke to investors around Connect as a whole. The broad geographical regions, it's hard. All these business models, it's hard to take off as one piece. As soon as I announced that the company is being, this kind of MBO kind of basis, and we're going to split this off, there's been quite a lot of interest in Southeast Asia already, just engaged around that model. So I've seen it very, very in 2 days, just like, funds coming in, and ask me questions and say we're interested. So, because when you look at the assets individually, they're much more attractive than combining a load of stuff together. And that's kind of how we're looking at this. So, when we look at, say, for example, Southeast Asia or LATAM, realistically, at some point, these will be separate. These will be separate businesses running with their own P&L, with their own management teams, effectively growing and building businesses. And I think this is where the company, this is the playbook that I think, this is not just for my playbook. I think, Simon, this is your thought process as well. We spoke about openly around, what happens in the future of these businesses. Yeah.
Now, I love lessons learned, right? I try to ask people who come on the podcast, over the last few years, what are some of the lessons learned? I got 2 buckets I want to ask you, right? 2 or 3 lessons learned about building a transaction-based business, especially working with vertical search and property portals. What are some of the 2 or 3 really key lessons learned in doing that?
Yeah, I mean, to be brutally honest, one is to not listen or care too much about what the market says, because it will just hold you back. All this noise around what would happen if you did this. This is just noise and you have to remove it. That would definitely be one thing which I spent way too much. The second is really understand your levers. Don't get caught up in all this nonsense, whether it could be in this realm, it's AI, it could be blockchain yesterday and something else previously. Still, your levers will remain unchanged. In transaction business, agents, leads, inventory, right? The rest of it is process for efficiency, but ideally stick with your levers and do not get distracted by noise going on. It should really upset your momentum. And the third is just to be very, very focused on what you're trying to achieve, which we wasn't. I mean, FazWaz as moving into transactions, Portal was trying to do lots of things, and appeasing too many parties. If we just did one thing really, really well, we realized that we would grow at a very fast rate. So, I guess we made all the mistakes. We've done everything from valuation models and tech-enabled this, and all these crazy initiatives are running. None of them worked realistically. But the bread and butter is we're very good at transactions, and we were sticking to that core basis. We're making very good money from this, and we see a way to increase down that thing. So someone once says we focus on what works, not what doesn't, and that's definitely stuck with me in my head here.
Okay, now my other bucket.
Yeah.
What are the 2 or 3 key lessons learned in doing a transaction like this?
Yeah, it's a good question. So you need very good people around you. Obviously I'm doing a transaction where I'm isolated because I'm an individual, and obviously my company is conflicted. So one, have very good people around you. And I was lucky enough, I had F4V engaged on the M&A side, so 2 very talented people helping me out to understand negotiation and contracts and financial due diligence. Lawyers, you need some really good lawyers. They basically drive the process forward. So they're definitely, having good people around you is one thing. The second thing is you're in this for the long run. As in, I feel realistic I can get this done in 3 months. This deal took me over 10 months, non-stop, dedicated my life to it. I feel like I've lost 10 months of my life to one transaction. So you're in it for the long run, realistically, a deal this size, especially dealing with a large public company that has unlimited resources to spend around and lots of people to deal with. So the third one was, is mainly resilience as well. You're going to go through some times where you're thinking this isn't happening, right? It's a consistent process, and you spent so long. You have to be unbelievably resilient and keep going and find out solutions to problems, and not really give up on what you're trying to achieve, because if it had legs, it still has legs. So I think have great people around you who know a lot more about everything than you do, which is I did. I had Pafori. I mean, Simon, you was one of them, which I mentioned on my LinkedIn of all the people I thanked. There was a whole list of them going on. The second one is understanding this is the time frame. Free yourself up. I had another CEO come in, a business partner of mine, Paul, who came in and ran the business because I couldn't physically do the deal and the business at the same time. And the third is that, be prepared to, you're in this, get dug in. You have to be absolutely resilient and thick-skinned. Things can be thrown at you. Obviously, I mean, with Connect, there's a lot of companies involved. There's got 25, 30 different companies, actual physical companies with lots of different countries and lots of different business models. And you're going to have to be resilient to get the deal done. So assuming you have that and the other side has the same appetite, which they did, a deal can be done. But it definitely hasn't been an easy deal. It's been quite tough and wary. So But yeah, so there'll be the three things I've learned through doing a transaction of this size.
I think what you said before about not listening to the noise, I think that's going to be really key. As far as I'm aware, there's no other business like the business that you've just taken on. I don't think there's any other business that is as global and with three different kind of parts of the value chain, three different business models. It seems like there's a frontier there in front of you. And you, as someone who is, like you said, a real like 100% founder as opposed to corporate whatever, it just strikes me as like the right fit for somebody trying to take on something so big. I guess my question is like, if there aren't any companies out there that are doing the same thing, which companies or which kind of examples do you read about, pay attention to, want to know more about as you start on this journey towards kind of integrating everything?
Yeah, I mean, that's a really good question. I think there's a lot of companies. I mean, they don't have the broad scope that someone like yourself or Simon does in terms of who the players out there. But say on the transaction side, Redfin, Compass, there's a few of them who are inspiring what they've done in terms of rolling up brokerage, everything else. In the portal space, you've got companies like Property Guru who have dominant assets, at least in Singapore, and not really blown away by the rest of their portfolio. But Singapore, they've done really well. The same in Lifewall in Japan. Obviously, you've got REAs, but I don't think we're ever going to have that dominant portal player, realistically. I think on the CPC side or the vertical search, as it's described, that's a hard one. Obviously, we're in the league of our own. We're the biggest real estate aggregation company in the world. We're the only real estate aggregation company in the world, just to be clear, probably that exists. So, as far as I understand, so we're kind of in league around. I think one is taking inspiration from lots of players. It can't just be one. So we're looking at a few people. I mean, I've got into reading a few annual reports now and trying to understand what people are doing. And I guess have a lot of fun while we're doing it. For us, this is, like we have to have fun. I'm kind of excited. We feel this is you can't not have fun doing this. This is going to be a really difficult challenge. I'm like, hey, this is a big ride. We've got a global asset. Obviously, there's not much of a comparison to this. And we think we're going to have fun and we think we're going to get it to work, is the honest truth. And we feel like we're going to build a few regional leaders here that you have to have that mentality as you don't go into the deal, right? Realistically. So if you ask me, where this is going, yeah, this is going unicorn. We don't know if it's 3 unicorns as the last speaker spoke around, square yards, but realistically, this is going to go big and fast as quick as we can. We're going to take inspiration. Luckily I have a lot of mentorship around me. I've always had. So there's some good people that I can already call on that have a lot of knowledge, and no names mentioned on this conversation. But and that is where I'm taking inspiration from. We understand the market, so now we're going to put in a good team around us. Have a lot of people very close to us to understand the wider breadth of what's going on at a global scale and different business models, and really trying to attack the market as aggressively as we can. I think that's what we can do, and have fun while we're doing it. That will be the last point, which is important for me and the other 2 founders, definitely.
Cool. All right. I'm conscious that we're probably taking up valuable time of the man with the biggest to-do list in all of Thailand. So, Mike, thank you so much for coming on and being very honest about the business. I'm sure it'll be very useful to people out there.
Yeah. Thanks very much.
Good luck, of course, as well.
We'll see you in March. That's it. So the people.
Yeah, which actually is a very good point. Michael's actually coming along to the Property Portal Watch conference in Bangkok. Well, it's not far, it's just down the road. He's speaking there, so we'll get an update for those who come to the conference about how Lifull Connect, or whatever it's going to be called with the rebranding, is doing. Some more expose of some of the, not only the reasons behind doing the deal, but also a bit of a deep dive into where the group goes. And the other good news is Paul Trayman, Michael's partner, is going to speak about what's happening with FazWaz and how the real lessons they've learned around how to integrate vertical search with portals, with transaction engines. So I'm looking forward to that. For those who are unaware, we're running a conference, Bangkok, 12th, 13th, 200 C-level leaders from around the world. Registrations are going very well. And if you're interested in coming, go to www.ppwapac25.com. That's ppwapac25.com. So I hope you can make it. And I'm looking forward to seeing Michael there. His team is coming along. and it should be a great opportunity.
Can I make one more plug? We are an acquisition hunt right now. We're looking for, I know a lot of young founders and new entrepreneurs in the prop tech space are watching your podcast. I mean, I think Simon, hopefully still with us in the long term.
It'll be fine, don't worry.
Okay. But so I know a lot of young founders look up to the PPW and watch this podcast. So if you're in the regions we're operating, please get in contact. Please also come to PPW. We'll be there. We're going to be quite aggressive on the M&A side. So great place to meet in Bangkok and that. So on the M&A side, we're definitely looking to speak to as many interesting companies in the regions as we can. So yeah, there's the plug.
Excellent. Thank you. And you heard it here first. Michael is in the process of building 3 unicorns. So we wish you the best of luck with this challenging mission. But let's say if you even get one of them and to be a unicorn, that's a fantastic outcome.
Yeah.
So well done at your 10 months of perseverance in getting the deal done. And good luck for the future in building out vertical search, Latin America and Southeast Asia transactions simultaneously.
Thank you. We'll see how it goes. I'm sure it'll be fine. Thanks, guys.
I've got a feeling that the interesting thing is I think I've known you, Michael, for a decade at least, probably.
Yeah.
Going way back to when FazWaz was a baby.
Yeah,
a pretty young business, and when we were at Mature, we were looking at we were talking about how can we do an acquisition or work together or something, because we could see the value in what's happening, and here we are, sort of that 8-10 years later, with you having, as Ed quite rightly put it, taken on one of the biggest opportunities and probably most challenging opportunities in the prop tech world. So
it's a crazy story, Simon. It's a crazy story. I mean, if everyone knows the full story, it's pretty crazy. So, which makes it as fun as it has been. But yeah, thank you for that. I appreciate the kind words. Thank you.
All right. Thanks, guys. And see you in Bangkok.
Thank you.
Bye bye. Thank you. Bye bye.